What do Americans think the best long-term investment is? Gallup has been running a poll. In the last 14 years, Americans have responded with the same answer. It's not stocks, it's not Bitcoin, and it's not gold. It's real estate. That's understandable. We hear every time stocks have a downturn in the market, it's always front page news. Real estate over time generally tends to be a lot more stable and slowly trends upward. Let's look at the numbers to see which asset class performed better over the last few decades. We have here the Zillow Home Value Index for all homes, including single-family residences, condos, and co-ops in the USA. This index is a seasonally adjusted measure of the typical home value and the market changes across the country, and this is the middle of the market. So the 35th to 65th percentile range. It's really getting rid of anything that's extremely cheap or extremely expensive. And it goes back to the year 2000, so that's where we start our graph. And we can see in gray, these are the three recessions that we had, 2001, 2008, 2009, and 2020. It has about almost a 2-to-1 return, so we're looking at 198%. To compare apples to apples, here is SPY, which is a proxy for US stocks. And I went back to 2000, which is when the Zillow index started, up to the present day. And we can see here the performance on the top left in green is 413%, which is over double the amount of the Zillow housing index. For an additional data point, I have the Case-Shiller US National Home Price Index, and that goes back to the early 90s. And if we go back to the early 90s, it has appreciated 336%. What about stocks during that same period of time? The SPY US Stock Index was up over 1,300% over that exact period of time, a substantial difference. So the numbers show us that stocks have outperformed greatly compared to real estate over the last few decades. But you might say, well, what about the tax advantage of owning a home and selling it with a gain versus stocks? You can avoid capital gains on a home sale of up to $250,000 for a single person, or $500,000 if you're married filing jointly under an IRS exclusion. To qualify, you must have owned and used the home as your primary residence for at least 2 of the last 5 years prior to the sale. Even with this tax break, however, stocks still would come out ahead after paying taxes on your gains from the stock market. So why have Americans chosen real estate over stocks for the last 14 years when the numbers show us that stocks greatly outperform real estate? Well, it might be because most Americans own a home and less Americans own stocks. It might also be because the media scares people every time there's a downturn in the stock market with major headlines. From a housing perspective, we don't hear about it all the time. Now, obviously, 2008, the subprime loan crisis, that was huge, front and center, but typically we don't. Now, one positive attribute about homeownership is having a mortgage forces you to save by building equity within your home. Also, homes typically go up in value over time. So it's not to say that homeownership is bad in any way, it's just simply that stocks over time, in our example, have performed better. Now, let's not forget that a lot of the value we derive in owning a home is very subjective. And it could be raising a family, it could be time with friends, it could be making lasting memories that are priceless. Thanks for listening. We look forward to seeing you in our next video. Have a great day.